If a hailstorm just hits your neighborhood, make sure you stop before you call your insurance, before you let an adjuster come to your house, even before you have a roofer come out to take a look at the damage. These 10 terms are gonna help not only save you thousands of dollars, they're gonna help you not waste your time and have a much better claim experience overall. Actual cash value, or what's referred to as ACV, is essentially the first check the insurance is gonna be able to give you for your insurance claim. If we look at a roof, let's say that it's 25 to a 30-year roof, so an architectural roof, and you have 15 years on that roof in itself, instead of the insurance paying the full amount for what it would cost to replace that roof, they're going to pay you today's value for that roof in itself. So your out-of-pocket costs in that case are going to be your deductible plus whatever the difference is to actually replace said roof. There are two different types of policies out there, ACV and RCV. RCV we're gonna talk about in a little bit, but that's definitely the one that you want. Replacement cost value. This is the premium insurance policy that every homeowner I recommend to have, because insurance is gonna be a 2-check funding process for the most part. It can be 3-check in the event that you have supplements that come through that could make it a 3-check, 4-check, 5-check funding process, but hear me out. Let's say that you have a 25 to a 30-year roof, and we're gonna throw in numbers here, that it's a $50,000 project in itself. The first check the insurance may give you, if it's a 15 out of a 30-year roof, is gonna be something like 25 grand. Well, they're holding back what's called recoverable depreciation to then give you the back-end money once you actually fully complete the roof. So in the ACV example, you may have only got that $25,000 check, been responsible for the deductible and whatever the cost difference is. But here with the RCV, the full replacement cost policy, they're gonna give you the first check. You're going to plant the seed, as in select a contractor to come through and do your work. Once that work is finished, the insurance is gonna release the second part of the check, hence recoverable depreciation. Every homeowner that I speak with, this is the policy that you need. So check your policy and see which kind you have. So number 3 is deductible. A deductible is your contractual agreement with your insurance company that you pay to be able to get the insurance work completed. Now, there's 2 different types of deductibles that we're seeing out here in the market nowadays. You have a flat rate deductible, meaning that no matter the amount based on the policy or based on the storm damage, you're only gonna pay this one flat amount. If it's a $100,000 claim, a $500,000 claim, if your deductible is $1,000 for wind and hail, that's what you would pay for a wind and hail deductible. In the event you have something like a percentage-based policy, so it could be 1%, 2%, or 3% even, based off the home value that you have. So if you have $1 million home and you have a 2% policy, then you'd be looking at $20,000 for a deductible. Big difference, and unfortunately a lot of people figure out what deductible they have when I'm sitting across the table from them. The other thing you need to know about deductibles is that it is insurance fraud for your contractor to offer or to actually pay that deductible for you. People will think, because in that $100,000 example, it says less deductible on their insurance paperwork. Like if they had a $1,000 deductible, oh, the insurance already paid that for me. Well, in fact, if you call up to your insurance and verify, hey, did you guys pay the deductible, or is this something I'm required to pay? They will then let you know that, hey, that's on you, but the rest of the money, they're gonna be paying out to you guys. Number 4 is gonna be supplements. Now, a supplement is anytime the insurance misprices a line item on your scope of work or just completely misses and forgets to pay for something, your contractor on your behalf can go back to your insurance company and negotiate and say, hey, in order to best do this roof, we have to install drip edge. We see that on the scope that you provided that drip edge wasn't paid for, that only 2 of the 5 turtle vents were paid for. Or for something like, let's say your personal property, if you had a grill that has massive amounts of hail damage and it didn't end up on the insurance scope of what they were paying you out, then you could take a look at that grill, go price shop it and say, hey, this is where I bought it from, give them a receipt and put that in as a supplement from the homeowner or the consumer. Contractors don't do this, guys, because they're trying to be greedy. What we do this for is because there are line items that need to be installed on your home as per code, such as ice and water shield, drip edge in certain areas, and we want to make sure that we can provide you the highest grade material possible without cutting corners. So if you hear the term supplemental, that is what your contractor is talking about. In the other examples too, it takes the 2-check funding process that is an insurance claim and can make it 3 checks, 4 checks, or 5 checks. Basically put out that supplemental to your insurance company that they approve small chunks of it at a time, and will then they're gonna be sending you checks in the mail or digitally, electronically for you to accept. Number 5 is Xactimate. Xactimate is an insurance pricing software, similar to Symbility. So there's 2 different kinds, and the insurance, for the most part, 90–95% of them are writing their estimates in Xactimate. What that means is that the insurance is gonna pay a fixed amount per line item, per city, per item for certain things during your claim. For example, they're gonna tell Caleb and Keys Roofing, if we are in Ladue tearing off a roof, how much are they gonna pay us per square to be able to do that? How much are they gonna pay us per square to install your high-grade designer roof? How much are they gonna pay us per square for the drip edge or the starter that we need to actually start the shingles out for your perimeter fastening system? More often than not, people will think that the contractor comes up with the pricing for insurance. However, it is a standardized pricing software that the insurance essentially tells us what we have to charge. That's why here at Keys Roofing, we use Xactimate in conjunction with insurance work, because we want to speak the language that they are speaking. Me handwriting an estimate, typing something up that isn't in the same format as Xactimate is doing you a disservice, and I want to save you guys time, which is why we speak the same language as them. And scope of work. After your insurance adjuster comes out and they write everything up in that Xactimate form I was telling you about, they're gonna give you a scope of work document. Now, this is a line-by-line itemized list of exactly what the insurance is paying for. More often than not too, homeowners don't understand how to read through these documents, which is why I'm making this video. But secondly, it's gonna tell you the price, it's gonna tell you the amount of tax that you pay per item, how much per linear foot, how much per square is allotted to these different trades that then are gonna be completed on your house. So that scope of work, if you ever wanna like put yourself to sleep or you need some melatonin, like just read that. It's gonna put you straight to night-night, but that's what we're helping you guys out with. And then number 7 is gonna be recoverable and non-recoverable depreciation. So when you're reading through that scope of work document, you're really gonna wanna look for different symbols. So on the recoverable depreciation side, you're gonna see the parentheses. When it comes to non-recoverable depreciation, you're gonna see what looks like carrots or like alligators, what they used to tell us like when we were kiddos. Essentially, with the ACV policy, that means you have non-recoverable depreciation on the back end of this claim. So if insurance is paying you, let's say for window wraps, $250 per window wrap, up front, they may be paying you something like $175 for the window wrap. But in order to get that other $75, you actually have to complete that line item, prove it to your insurance company with whether it's pictures, it's invoices that it got done, and then they will release that back end check in the event that you have recoverable depreciation. So 175, and then you have 75 if it's got the parentheses. 175 plus 75 is 250. But if you have a non-recoverable depreciation policy, in that same example, if they're paying you $175 for a window wrap, you may see the caret symbol 75, meaning that regardless if you do that window wrap or not, they're not giving you that back end $75. So recoverable means you will get this money on the back end. Non-recoverable means that you won't. Adjuster. When we're looking at insurance adjusters, there's actually 3 different types that you need to be on the lookout for. So we have staff adjusters, independent adjusters, and public adjusters. A staff adjuster, let's say we're working with a staff adjuster at State Farm. This is somebody that works solely for State Farm, whether they are out in the field sometimes looking at stuff, if they're desk adjusters, that they are just taking the photos that we get from claims and then making a buying decision, but they are solely contracted and they solely work for said insurance company. Independent adjusters means that they are the eyes, ears, and boots on the ground for insurers. Given that we have massive hail events, these insurance adjusters can be flying in from all over the United States. So here in St. Louis, Missouri, it's not uncommon that I could be working with an adjuster that's from Colorado or Texas, Florida, sometimes even California, like what we saw during this last tornado, that they fly in and they contract with the insurance companies, basically document all the damage and can make buying decisions based off what they see. Now those are typically the adjusters you want because of how they get paid. So essentially those guys, they're paid based off how much they buy and they have more incentive to do so. A public adjuster is very different though. Anytime you're dealing with a large loss claim and you feel that you're being wrongly done or denied, severely underpaid, this is a type of adjuster that you as the homeowner can partner with to look to get your severely underpaid or denied claim paid out. And the way that they work is going to be based off of a percentage of the claim once it's fully paid. So if you go from $5,000 on a claim to 100 grand and there's a $95,000 uptick, then they're going to take a percentage of that uptick in revenue on the claim. So you would be responsible for their percentage payout, your deductible, and whatever the difference would be in that case. So those are the three different types of adjusters. Then we're looking at hail damage versus mechanical damage. Now, to the untrained eye and to somebody that's new in this business, they're gonna think they're the same exact thing, but they're so far from it. So hail is an ice ball. And when an ice ball hits, it's gonna either leave a circle-sized dent in your soft metals, or it's gonna leave a circle-sized compression in things like your shingles, where the hail will hit and impact the granulars on that shingle. As it rains, it'll scoop the granulars out, which is why you start to see so many granulars on the ground or in the gutters post-storm, is because now that it rained, like it's washing away all the sand, as what some people will call. But mechanical damage is, let's say I'm looking at a downspout that's right in front of your garage that just so happens to be next to some of the trash cans that you have. Well, mechanical damage, it will hit and it creases. So if I see somebody's like gutter downspout that's like bent in or folded in, and you could tell it looks like something hit it or it got elbowed, that there is mechanical damage and something that your insurance will not pay for. So with hail, we're looking for circle-sized dents, and for mechanical damage, you're looking for creasing. It's important you know the difference and you partner with a contractor that knows what they're looking at. And last but not least, number 10 is wear and tear. The insurance company, if left to their own devices, will try to use this against you, and hear me out. If you have a 25 to a 30-year roof and you may be on year 20 of that or 15, there's aging in every single roof, aging in every single building material. That does not discount the fact that there could be hail damage up there along with the wear and tear. Well, wear and tear could show up such as granular loss. It could show up in discoloration, shingles blowing off, just so many different bundled terms that when we look at wear and tear, of course, 20-year-old Honda versus a 2026 is gonna look dramatically different, but that does not discount the fact that it's an old roof, but also a damaged roof. So if I get up on your roof and I'm talking about, hey, there's wear and tear up there, we're gonna wanna look into, do you have a roof that is actually damaged, or is your roof old and we just need to replace it because of that? Hopefully these 10 terms have enlightened you guys. My goal with making these videos is to really educate homeowners. I do this every single day, so I know these terms like the back of my hand, but I wanna put them in like 5th grade language that everybody can understand and increase and boost their confidence when going through a hail claim. So my name is Caleb with a K, owner of Keys Roofing here in St. Louis, Missouri. If you guys enjoyed this video, make sure to hit the subscribe button, follow, and share this with somebody that's either going through the claims process or just needs to know more about this. See you guys in the next video.